Now, so the next talk is with a super major arriving in Denmark. That is Total. Michael Borrell is Senior Vice President with Total, and he will now give an insight in Total's business model as a super major oil company and talk about their ambitions on the Danish continental shelf by acquiring Maersk Oil.
Thank you.
Welcome.
Thank you.
So, Michael Borrell, what made you come to Denmark? Not you personally, but Total.
Well, I feel like an old timer after Ron, since he only arrived in June, and I've been here since March, so I feel I've already picked up a number of the traditions, although I'm waiting for the beer to arrive at the end of next week. That's perhaps why I arrived in Denmark. No, perhaps more seriously, what made us move into Denmark as a super major? You know, I think there's a couple of things I would pick up on. I think what we did with the acquisition of Maersk Oil is a very good example and illustration of a company like mine's strategy. We've been through some difficult times as an industry since 2014. The price went down very significantly. There's a lot of volatility going forward. We as an organization put a lot of effort into controlling our costs, maintaining a very strong balance sheet, and being able to invest counter-cyclically in the areas in which we're good. So there's one thing we don't control going forward, or looking back, and that's the price. What we do control is how we manage our operations, how we manage our costs, how we manage our safety record, and it's those things that we think we can excel at. And so the acquisition of Maersk Oil is exactly in line with where are our core strengths. One of our core strengths as a French super major is there isn't any oil and gas in France, and one of our core areas is the North Sea. We think we're good at the North Sea, we think we're good at conventional oil and gas, and therefore let's characterize Maersk Oil and Gas as 80% North Sea. So it's building upon our core strengths to build our long-term future in an area that's of interest to us, that despite it being mature, still has lots of future growth availability. And that's why we made the acquisition of Maersk Oil.
Yeah, and not really just
I haven't quite finished. So the next part of it is we're here for the long term. Of course, we need to make money out of this. And so this was the largest acquisition we'd made since the 2000s, $7.5 billion of investment in Maersk Oil. But we had a relatively low share on our operating side. We were 31-ish% in DUC in Denmark. And we like to operate with more than that. We like to leverage our position. When we put a lot of effort and work into that operational excellence I talked about, managing costs, managing operations, managing value. And so we like to step up and leverage that. And that's what we've been able to do with the acquisition of Chevron's 12% additional share. Exactly. And that then we're much more comfortable with now at 43%.
Why does that make you more comfortable?
As I think I just said, it makes me more comfortable because where do we want to operate? We want to operate in areas where we can excel, where we can use our core competencies, but also where we're rewarded properly for the effort we put in. When you operate like we do, we've put in place a structure here in Copenhagen which builds on the best that Maersk had and also adds to that some of the best from Total to build a really strong organization going forward. When you put that effort in for the long term, you want to get your value back out of it. We can get much more value back out of it at 43% than we can at 30%, provided, of course, the price we paid is the right one, which it is. And therefore, we can leverage that going forward and get value out of the 43%.
So you say we're good at oil and gas in Total. So does that mean you're probably not going to look into other sectors of the Danish energy sector?
So now I need to separate what's Denmark and what's the rest of the world, because as an organization, clearly we are looking at, in addition to oil and gas, low carbon, electricity generation, and the low carbon business. But we've been through a process over the past few years to define our ambition, where we want to go to, and how we want to be perceived as the responsible energy major. And that's really our tagline for this. We believe we can become the responsible energy major. When we say that, we need to excel at what we do well. So we will stay, I'm going to say now, a gas and oil company. So it's oil and gas principally, and looking 15, 20 years ahead, we will still be 80-odd% oil and gas. But as part of integrating climate, and the energy transition into our strategy, there's that other 20% there. So we currently invest and will continue to invest $1.5 to $2 billion a year on the low carbon side. We've restructured ourselves internally. We have an integrated gas approach on the gas side. We'll be in combined cycle gas turbines. We'll be in power generation on the wind turbine side, on the solar side. We're already a large solar panel producer. And we'll move into gas and electricity distribution, because when you look at these scenarios going forward for the energy transition, it's clear that oil will remain flat and potentially then decline. And so our response to that is to be on the low cost side, low break-evens, and then we can cope with the volatility. Gas will continue to grow and will be the transition fuel for the next 20, 25, 30 years, and therefore we'll invest significantly in gas, hence the gas and oil part. But power grows very significantly, and that's where we'll then start to invest, and we are currently investing in the low carbon technology. That's the worldwide approach. Then in Denmark, we need to look at the opportunities. I think principally in Denmark, we will stay oil and gas and look after the DUC assets, and then look after what the minister mentioned, which is the 8th round, and whether there are other things we should be doing after we do the tour redevelopment.
So, but because I just spoke to Ron Coyle about the fact that Denmark, after all, is a mature area, and that typically means that production is declining and costs are typically so rising. But as the minister say, or according to the energy agreement anyway, there seems to be large remaining resources. Are we doing enough to get these resources out of the ground? Or what do you think are the preconditions for getting them out of the ground?
It's a question of economics. It's very simple for us. Life is relatively straightforward. We're competing for capital and investment with the rest of the world. We look at the hydrocarbon potential in any area that we operate in, and we look at it on an economic basis to see whether that's where we should be putting our money. And the 8th round, exploration round, is a good example. There are some very mature areas, there are some quite immature areas, and so we'll look at that and see if we can find the potential. What I would do is, you asked Ron about whether he had a wish list for the government. I don't think we have a wish list, although I think the minister's left, hasn't he? But we don't have a wish list as such. What we would ask them to do is to provide stability going forward, and also to accompany the industry, as it did do with the Tyra redevelopment, such that where we face challenges, we can work together to put in place the right fiscal regulatory framework such that we can invest our money here profitably for the benefit of ourselves, clearly, but also for the benefit of the energy transition that we heard the minister talk quite eloquently about, as to us providing the foundation and much of the money to take the country where it wants to go to.
Okay, so, but as you see the frames now, you're not going to... There are no sort of big things you want to discuss with the government currently?
Stability, evolution, and accompany us as we go forward to give us the platform on which we can invest going forward. I think we've got that with the agreement that we put in place that was partly negotiated by one of the Martins. And thank you to the Martin Squareds, they are doing a very good job. Going forward, and the minister alluded to it. It was a good discussion that was had on the regulatory and the fiscal side to put in place the right framework to set us up as an industry for the next 10, 15, 20 years following the redevelopment. And that was the right thing, I think, for us as an organisation to do, and also for the country to do. And it provides the foundation for the energy transition and the energy agreements that the minister was talking about.
So you said very clearly, I'm going to, or Total is probably staying within oil and gas in Denmark. However, Denmark is really a pioneer when it comes to renewable energy. Do you, can you use any of the competences here in Total's activities elsewhere?
There's been lots of stuff in the press recently. I think most of it came from an interview I gave, so I need to be very cautious about what I say, so don't misinterpret me. We're 80% oil and gas. I think we'll remain that going forward. I don't see us doing much on the renewable side in Denmark, but we will continue to look at opportunities. We've acquired an organization called EREN in Europe, they have a number of offshore and onshore wind turbines, and so we'll continue to look at that technology. And we've started some conversations with Ørsted here to see whether we can partner with them around the world potentially. Nothing is yet agreed, and these are exploratory conversations about areas that I think I mentioned when I talked about where Total is going in the low carbon front, to see where there is expertise that we can do. We've mentioned and we've done things on the gas distribution, electricity distribution side in France and Belgium particularly, where we're trying to build a core business. You need to get to a certain market size in that area to be able to manage costs and be efficient, and we're in the process of doing that. I don't think we'll be doing that in Denmark in the near term. But then the long term is made up of a lot of near term, so we shall see as we go forward.
Okay.
But let's concentrate on what's the core business for us, which is oil and gas here, and excellence in operations, and making sure the redevelopment of Tura is done efficiently for ourselves and our partners and for the government. And that's where we're up to at the moment.
Mr. Borrell, let's see if there are a question, or maybe two for you, from the floor. Oh yeah, go ahead.
John Johnson from Rambøll. Last week we were told that Shell, after decades in Denmark, will leave and be substituted by Noreco. And that means you lose your biggest partner in the field here for DUC. I'm sure you've been discussing this, but I'm also sure you might not reveal it, but I'll still ask it. Do you think it will change future investment? Could it accelerate or accelerate investment that you might have in the drawer? And I'm not talking about Tyra, because that's kind of a done deal now that they're also buying into, but future potential investment. Would it potentially change that?
So it's a good question, but I think you've already answered it in your question. But let me spend a moment just talking about the Tura redevelopment. It is a done deal. The project itself is launched. We had the first steel cut last week in McDermott's yard in Batam. And so the project is on schedule, on target, let's call it. We'll ramp down the production on Tyra during 2019, and that production then stops at the end of 2019, where we get into the phase of taking away the old installations, reworking many of the wellhead platforms to raise the splash zone out of the wave heights, and then the redevelopment that comes thereafter. So that's an important project for us going forward, and will take a lot of effort over the next couple of years. So the project itself is not a done deal. In terms of other developments going forward, it sets us up for the next 20 years probably to be able to look at where else we can invest money to be able to bring additional hydrocarbons and additional value into the partnership. Yes, Shell have made a decision, Noreco joining the partnership once the approvals are in place, and that's not yet done. You know, we work with many partners around the world. The challenge I give to our teams when we operate is to excel in those operations. We'll work with anybody. If we see value, we will try and accelerate that in our own right. And we've been particularly successful, in my mind, in making sure the partners come with us. If the value proposition is good for Total, it's almost always good for the partners. We like to have a challenge from outside. I get a lot of challenge from my head office in Paris anyway. And we have a lot of good engineers, both from the Maersk Oil Heritage side and from the Total side, working on these assets. And that's the key for me. Let's make sure the teams are motivated and given the right objectives, which is value and not volume going forward. And we will bring whoever our partners are, whether it's Noreco, whether it's Shell, whether it's North Sea Fund, or anywhere else in the North Sea, we'll be able to bring them with us, together with the government, as we create value going forward. So I don't see any change, in fact, from the way we will address it.
Thank you. Another question? Yeah.
Thank you very much. My name is Moller. I'm Dane, but I actually live in Singapore. With 80% in oil and gas, you will be extremely dependent for the next 10, 20, 30 years on the oil and gas price. Would you like to share with the audience how you look at the oil and gas price for the next, let's say, foreseeable future? And the foreseeable future is as long as you can foresee.
There's an easy way out of that, which is I can foresee about until the end of this session. I think the oil and gas price, so no, I'm not going to share any scoops or insights into our view of oil and gas prices going forward. What I will say is, and I'll come back to one of the comments that I made, but let me expand on it a little bit. What do we control in our industry? What we control is our costs and our operational excellence. And that's where our efforts are concentrated. We as an organization, in 2014, when the oil price was very high and it started to come down very significantly, we had operating costs in our overall worldwide portfolio of just under $10 a barrel. Through our efforts and the efforts of the industry that we use to be able to manage those costs, we've brought that down to about $5.50. Our clear strategy going forward is to bring down our break-even costs. I probably don't need to remind you that if you go back to summer of last year, 2017, the oil price was only just over 40. I'll take last week's price, it was just over 80. That's a doubling in a year, and I don't need to remind you where it came from before that. This is an industry that is subject to huge volatility in the short term, and yet we're investing for decades ahead. And therefore, the key in our mind to doing this is to bring our break-evens down and make sure we control our costs. What we've done over the past 4 or 5 years is to bring those costs down. I gave you an example. It also allowed us to invest counter-cyclically. I think the numbers for Total is we've brought something like 7 billion barrels of oil equivalent into our portfolio in the past 2 to 3 years at a very competitive price. The key now for us with the oil price having gone back up is to maintain that cost discipline and be able to then sanction projects on that cost basis to take us into the value proposition we're going forward, such that when the oil price is high, we are able to leverage that and generate good returns for our shareholders. And when the cost is low, when the price is low, our low-cost approach will allow us to be very robust in any environment. And that's the key for me on the oil side. The gas side is slightly different, and I mentioned that we will continue to invest disproportionately on the gas side to grow our gas business. That's driven by the energy transition, the growth of LNG markets going forward specifically, where we foresee 5% a year growth. It's been much more than that in the past 2 years, but 5% a year growth out to 2030. And you'll see us investing significantly on the LNG side. And that's also a very good part of the response to the climate issue, as gas is the energy transition fuel that takes us towards the lower carbon long-term future that I think we're all expecting.
Thank you. A final question? No? Well, it's been a pleasure, Michael Borrell. Thank you very much.
Pleasure, Jessie. Thank you very much.